Let me ask you a question. What happens when the truth doesn't trend? What if the real silver squeeze doesn't come with hashtags? What if it comes with consequences, a new reality? In fact, I firmly believe the real silver squeeze won't be a single event. It will be a fundamental shift in the market. It's going to feel like someone slowly tightening the two plates on a hydraulic press. Back in 2021, Reddit was on fire with hashtag silver squeeze. We all remember the phrases drain the COMEX, crush the short, silver to the moon. But everyone mistakenly thought the battle was about price and squeezing shorts, when the real war was about the position. That's exactly what we saw. While the internet was watching price and tracking metal movement, the institutions were comfortably playing a shell game with us. It was like their sick little version of Lucy and Charlie Brown kicking the football. We saw lease rate spikes, inventories drained, and yes, the bars were literally air freighted across the ocean. And right when it looked like the retail crowd might finally get some traction, they pulled the ball away again. And let me tell you what most creators, and definitely not the hype crowd, will tell you. They, meaning the banks and large institutions, they were playing chess, while most of the social media folks, they were out there playing checkers. Yes, there was what I would call maybe a mini squeeze where prices popped for a minute and then they got crushed on Friday. But there was no system collapse, there were no overnight millionaires made, and business went on as usual, and it will continue. But what it did reveal is that a different kind of silver squeeze is building, a quieter, deeper, and a far more real. So today, we're going to look at the three factors that show how silver actually got squeezed, why it matters, and what it really means to your stacking your future wealth. But you know, I can't start without saying, what is good, Stackers University? It's so great to have you here with me today. You're still here, so I already know you're going to love this video. So go ahead and hit that like button for me and check out the link in the description for our channel partner, investing.com, where you can still get an extra 15% off with my link in the description. First thing, the myth versus the market. Let me just say this clearly so I'm not misunderstood. This is not a critique of Wall Street silver. I've got nothing but love for the apes and we need that community. But here's the math. We, the true silver believers and stackers, we just don't have enough buying power to cause a true silver squeeze. We can absolutely move the market briefly, but we can't do what we just witnessed. That kind of move only happens in a bull market when there are massive inflows from large institutions and ETFs. While we saw incredible daily price spikes and a surge in lease rates, the bullion banks weren't trapped. It wasn't a shortage of silver overall. It was a shortage of deliverable silver in the specific form these depositories require, the 1,000 ounce bars that weigh somewhere around 69 pounds, just in case you were curious. And I'll admit, it was a little fun watching them scramble to fly bars to London, and it was great watching lease rate spikes while the so called market makers took a hit. The whole short squeeze story felt good, but it was really a story of industry friction. Silver didn't fail, our expectations did. Too many people chased the movie moment instead of really looking at the market mechanics. And that's a pattern we see over and over again in this game and in this market. Momentum traders always exaggerate price moves up or down, depending on which way it's the easiest to move the market. Here's the second point I want you to consider, and it's all about what I call the real squeeze. What we just witnessed needs context. First, think back a few months to the Trump tariff concerns when the market feared silver might be tariffed. A huge amount of metal was shipped from London and elsewhere just in case. Back then, the metals flowed into the West, specifically the US. As a result, London inventories got tight, not empty, but tight, and we simply have just watched that tightness work itself out in real time. Over just 1 week, about 18 million ounces of silver came off of the COMEX depositories, and a large portion of that was air freighted straight to London, which people reported about. At the same time, after years of weak imports and local selling, India started buying again and buying really hard. So in September alone, the imports hit about 26 million ounces, the strongest since January, with October already looking like it's going to be comparable. Reports show that the price gap, especially in India, got so wide that some traders were literally making money by just buying silver here and flying it overseas. I mean, that's crazy. There was still enough profit margin for them, but it's not unheard of. That's exactly what happened in 2020 and 21 here in the US. In a nutshell, this wasn't proof of a silver shortage. It was more like a traffic jam. Think of it like everyone leaving a concert at the same time. Everyone's trying to get out of one exit and just can't handle the flow. Let me give you a real example that most of us can relate to. Remember in 2020, that whole toilet paper shortage thing? There really wasn't a shortage of toilet paper. It was just a mismatch between what people wanted and where it was stored. Residential roles vanished, but warehouses were full of commercial stock. But no one could use it because most of us don't have commercial dispensers, and most of us prefer a higher quality than what you can get at the local gas station. But doesn't that sound familiar? London not having enough silver doesn't mean the world was out of silver. There's plenty. But refiners were so backed up that they stopped accepting junk silver because they were too busy converting 3 nines fine silver into 1,000 ounce good delivery bars. There's enough silver. It just takes time, effort, and incentive to get them to move it. That said, the market can still fall victim to pressure when a critical mass of buyers hits at the same time. And that's where this really gets exciting for us. What we really saw was that there were cracks being revealed and cracks that can be exploited. And they won't hold up once the general public flees from the overvalued stocks into gold and silver. What we're seeing right now is short term profit taken on the surface, hiding long term scarcity underneath. Pressure in the pipes causes cracks, and cracks eventually burst the pipe or the system in this case. So, the third thing I want you to remember is the big picture is the focus. Our greatest advantage as stackers comes when our outlook is 5 years, not 5 days. While the so called structural deficit in the silver market is driven largely by investor demand, the good news is that most of us have diamond hands. We're not selling $100 silver, and we're definitely not selling for $50 silver. Those billions of ounces sitting in above ground depositories, though, are not in the hands of the COMEX, LBMA, or Shanghai exchanges, and most likely they're not in 1,000 ounce good delivery bars either. So when retail investors start flooding into ETFs, the real question is, where will they get that silver from? That's when refiners will be scrambling, selling their souls to buy ounces from us just to supply the exchanges. That's when the real silver squeeze happens, when they need our silver to make larger bars. That's when your local coin shop shelves will go empty. That's when the public will suddenly want all the silver that they can hold. That's the doom loop. The pressure builds, the pipe bursts, and the exchanges get exposed for what they really are. Industrial demand is like the engine, and monetary demand is like the spark. Together, they will build pressure inside the financial pipes that move silver through the global system. Each deficit, each new buyer, each policy shift adds more pressure to those pipes. Short term traders might jiggle the pressure gauge a little bit, but the fundamentals are tightening the valve. And when it finally bursts, it won't be hype, it will be a full system reset of value. For now, the system survived this recent surge, but don't mistake survival for strength. If you want to prepare for the real squeeze, make sure your financial house is tight. Grab a free copy of your financial blueprint at stackersuniverse.com. It'll walk you through how to build a system that protects you for tough times. Now, I want to hear from you in the comments section. At what price do you think the real silver squeeze starts? When do you think it happens? Or simply drop an A plus in the comments if you love stacking silver, got value from this video, or if you just want everybody to know that you always stack smarter and never stop learning.